I mean, is it not obvious by now? A ceasefire and a peace deal conversation could not get the market substantially back above the daily 200 SMA. So it was never really about the war, was it? Just like in 2022 with Russia-Ukraine, it was about the incredibly weak conditions behind the scenes that set the stage and have finally broken down due to the oil shock. And as far as I can tell, the conditions still look weak, although I do have to say I'm pretty impressed with semiconductors as a group today, which we'll get into later on. So welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 3 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off on the SPY daily timescale, and the first thing we should figure out is what's going on here from a trend perspective. Of course, the trend remains in the downward direction, with highs, lower highs, lower highs, lower highs, lower highs, and really the last 3 equal highs in here, underneath 662.50, they just strike me as a reasonable spot for the next lower high in the trend count. Recall that from these prior equal lows, 1, 2, and 3 here, we did set a big time lower low on the Friday session of last week, and the main point of the Saturday weekend watch list video was that the market could rally, it could go counter trend, and really it would be in service to setting a lower high on the daily timescale. I would say the market's done a pretty darn good job of doing that so far throughout this week's worth of trade. Of course, you can also see that you just mix in a little magic 200 SMA in there. The next thing you know, it's very difficult to argue that this is a bullish market environment here, and oh my goodness, the low is officially in. Now, speaking of lows, we do know the concept of a follow-through day, right? FTD. What we're looking for here primarily is a day that is at least up 1.5% on day 4 or beyond, so 1.5%, day 4 or beyond from the attempted rally, which technically is this day. Let's label that as number 1. This is number 2. This is going to be number 3. So Wednesday could qualify as day 4 or beyond, and ideally, volume would increase relative to the previous sessions. So you'll note here, I've got this green line on the screen, and it's kind of tangled with the upper edge of the weekly expected move, but it's 666.50, and that would satisfy the conditions of a plus 1.5% up day from today's close if that were to happen tomorrow on the Wednesday session. If I break out the rectangle tool, hopefully I can draw this a little bit more cleanly. Something like this would be a follow-through day. Now notice that that would take back the daily 200 SMA, and it would close back above these prior lows from over here. If it does happen on an increase in volume, I'll respect that as a slightly more bullish data point, but oh my goodness, am I jumping for joy and we're going to the moon and everything's fine and dandy? Absolutely not. It's one data point. You're going to hear a lot about this online. It is possible that that trade sets up, but it is not a base case. It's not the primary outlook that I'm looking for. And I would certainly still be respectful of the major weekly lower high that can be set, as we talked about on Saturday, anywhere underneath 675. Remember that to get a weekly lower high, firm lower high, you technically need to flip into a daily uptrend. So what might that look like? You could move to here, you could pull back, you could set a daily high or low, you could run into the weekly resistance, and then start to reject for the weekly firm lower high. I forgot to put the H here for lower high, of course. Now, I don't want to overstay my welcome any more than I have to on the bear side. So I'd be pretty cautious of being overly aggressive on this as a firm lower high. I'm just trying to paint the picture that even if we get a follow-through day tomorrow, it's not like we're out of the woods. I don't think that, again, as we'll see through the supporting evidence, the conditions behind the scenes have not improved so much so where I think that this is going to be the primary outcome, and the next thing you know, we're knocking on the door at the all-time high. I think there's lower odds of that right now. So what might there be higher odds of, you might ask? Well, it's a good question. Any weakness that sustains in here probably starts to look for bearish outcomes, equal lows at least, into Friday's low on a breakdown back underneath 653. That would be moving from a lower high in the daily trend count to an equal low, and ideally, what do we look for after an equal low? Follow through to a new lower low, continuation of the downtrend, and then the cycle repeats. We can then rally for a counter trend, set a daily lower high, and then move back down to the equal low, right? So something that looks like this, very reasonable over the next little bit if the bears can actually run away with it underneath 653. Let's take a look at the hourly time scale and see what's going on from this perspective. I would just point out that if the market was going to be more bullish, you would think that on the gap up this morning, maybe we squeeze out some of the shorts who started to get involved on Tuesday, right? That Tuesday gap down didn't really go anywhere. So you might think to yourself, all right, perfect. On the gap fill reversal or sort of the weak close there, maybe some folks head out short. headed into the Wednesday session. The gap up on Wednesday did not yield a short squeeze, right? There was no rally to take out the 200. We just rejected the same equal area in here. So in my view, this isn't really what bulls would want to see. We're not putting the pressure on shorts. Shorts still seem to be somewhat confident here, holding tight in their positions and possibly looking for what? Well, rather than inverted head and shoulders, how about just a rejection of the 200 SMA again? And now all of a sudden, what does this do? Right? Now this is just a trendline break. You could think of this as a bear flag or a bear pennant on the hourly, and we're targeting the equal low, right? So 653 is the gatekeeper for that trade. Anything that looks like this for bearish consolidation, the base case is going to look something along these lines. Under 653, target 646 as the low from not just Friday's low, but also off to our left from previous areas of support. If we go further than that, we know that we have the 642.50. And then really, think about the expected move of the week. The market has priced in that going down here would be well within the bounds of, tolerable risk from an options pricing perspective, right? Yeah, sure, headed into the Monday session with the gap up and the news literally released at 7 a.m. Sure, right? Markets made this big move in the upward direction, and suddenly this seems like it's super far away, but the options market, technically as of Friday's close, was saying, no, this is well within striking distance. So any rejections away from the 200 that really start to accelerate, don't be surprised if, let's just say the headlines get worse. I would say right now we're moving in the correct direction on the MFC EU scale, right? You guys who've been to the morning show know what I'm talking about. Maximum fear, complacency, and euphoria. The headlines have certainly shifted in this direction. We'll see. I don't think the market's really buying it all that much, right? Obviously, can't really talk about peace negotiations and having a deal put in place when you're literally about to have boots on the ground in the next couple of days. So the market doesn't really seem to be buying it. If the market did believe in the peace deal and, brokering that was going to be quote unquote easy, then I would think you would squeeze harder on today's session, right? Something that looks like this, and okay, all of a sudden now we're talking about upside, right? It's just not what we're getting. We're still getting this rejection underneath the daily 200 SMA. So let price really drive what your decision-making process looks like here. Don't let the headlines do it too much. Just let price light the way. And right now, the continued and sustained rejection underneath the 200 to me is another indication that, hey, I'm thinking we're more so not done here. We need to continue down to the equal low, if not follow through and do something that looks like this. If we move for upside, as I've made mention already, if we get the follow through day, I'll start to change my tone a little bit. It's one data point. I'll just be less bearish, but I'll still probably remain bearish on a potential rejection at the 20 SMA. And as we'll see, once again, the supporting evidence is not overwhelmingly flipping in the upward direction. Before we get on over to market internals, I do want to take a look at the intraday anchored VWAP stack. This is, of course, telling us that once again, all it's going to take is consolidation down here. You lose the anchored VWAP from the Friday session of last week, sub 653. You're probably just targeting that equal low. If we were to reclaim, sorry for the funky zoom there, keyboard shortcut on Thinkorswim, zoom back in like this, there we go. If we were to reclaim this area and start to tag the follow through day threshold, once again, 666.50, if we get there, then fine. We've actually reclaimed a pretty substantial anchored VWAP from one of the first major gap downs. That was Thursday of now 2 weeks ago, right? So I would really say on your over-unders, quite simply put, 662.50 and then down here at 653. Let's quickly hit it with a Fibonacci just to see if there's any confluence. I actually haven't looked at this from the last leg on the hourly. Perfect 61.8 rejections here. That makes sense, keeping the bears in control. Ideally, underneath the 653, you'd just naturally be underneath the 38.2 fib, which is, of course, also bearish. If we come in from the low of the move up to the top of the move this week, notice also that your breakdown in here would be putting prices back underneath the 61.8, offering higher odds of a 100% retracement. So just as it relates to where the market's actually spending more time, I would say that we're still in bearish territory as it relates to location. Let's take a look over at the market internals. If you're not familiar with the internals, check out the video tutorial in the top right-hand corner on how to set this all up and what it ultimately means. As you can see here, I got to give a little bit of credit as the market has stayed somewhat sideways over the last 3 days after the big gap up Monday morning. Volume flows were technically up, and that's just not majorly, but the major reason, let me slow down here for a second. The major reason is because the gap up was so substantially above the Friday close, right? Remember, this measures from prior day's close. Did the market actually go anywhere meaningfully on Monday? Not really. We went sideways. We did not even take out the news euphoric high there. So that's, again, another sign in of itself. If the market was truly a believer that a peace deal or something to dramatically reduce the time frame of this conflict in the Middle East was actually in play, you'd probably be above the Monday pre-market high. Obviously, the market's not even close to that as of right now. We're actually closer to the midpoint of the range that was traveled there, and if I just do something like that. So the market's like halfway to belief, if you will. All right, so volume inflows, but we didn't really go anywhere on Monday. Flattish on the Tuesday session. I'll give a little bit of credit today as the market grinds sideways. Technically, we did have some volume inflows. If we look at the AD line, really weak on the Tuesday session as we opened lower, but nice recovery. So again, I got to give a little bit of credit here. I can't be overly pessimistic. I still think location is generally bearish for the market, but at the exchange level, it's a little bit more of a mixed bag. Take a look at the index score as well. It's not like it was dominated by the sellers. It also wasn't dominated by the buyers. I would, concede that point also. Look at the sort of cumulative build on the tick. Once again, more so flat than anything else. You didn't really ramp here into the close. Remember that substantial reads are 5,000, could be bullish or bearish. Friday just sticks out like a sore thumb. Does it not? Although we've consolidated sideways here, so far based on everything I can see, paired with location, it's not like these internals, the last 3 trading days, are enough to really change the tide out there in the market. That I would say is the bottom line of the internals dashboard here. Let's jump on over to market profile. Where's value developing? Once again, here's your crazy overnight move. It's really not overnight, it's pre-market on Monday. Where did value develop relative to that move? I mean, it's certainly lower in that Monday session. If you look at Tuesday, it's lower. If you look at today's session, it is lower in the individual profile. It's more so overlapping and sideways than it is developing in the upward direction. And by the way, if you're not familiar with market profile, it's just a way to look at different price data, volume data. Check out the video tutorial in the top right-hand corner if you'd like to learn more. Generally, what would I watch for going forward? What we have seen, and I do have to give, once again, a little bit of credit where credit is due, the J period single prints from Friday are acting supportive as of Tuesday's low. So once again, credit where credit is due. If we had a weaker market, these sellers really should have just blown right through that and tried to find more price acceptance inside of the lower 50%, we call this D2, distribution number 2, on that Friday session. Underneath J period's low, it just simply didn't really shape up. It doesn't do anything to negate the fact that these are still beautiful lower highs up here on the higher time frame. We're just talking about the confidence of the sellers. You technically could have slightly more confident sellers here if momentum was really going to start running hard on the downside. Let's go back on over to the platform. Let's take a look over at our good friend, the nasty Nasdaq, and see what's going on with the Qs here. Daily chart to start every single time it rhymes. Here we go. Bottom end of the balance range. Has it been recovered into today's session? Survey obviously says no. You're still looking at a lower high underneath that. You're looking at lower high acceptance underneath the daily 200 SMA. We have plotted out the follow-through day satisfied level. 1.5% up day from today's close would bring you to about 596.65 in the QQQ. If you were to hit that and still reject, I mean, I don't know about you, but I'm still thinking about overhead supply weighing on price in the downward direction. Will you have to find a bottom eventually at some point? Sure. Could a follow-through day start to indicate that? Yes. Does it really change my tone to full-blown bullish, oh my God, all-time highs, here we come? Not really, as we've already sort of outlined. So for now, this looks like lackluster price action to me. This is sort of like maybe day 1, day 2, day 3, maybe tomorrow becomes a day 4. As long as this low from Friday remains intact, then, we'll still keep an open mind to this stuff. But for now, I would generally take more of a slightly more bearish approach. Overhead supply, lower high, under the 200. Didn't even test the 200 on today's session with the pre-market sort of rally there, if you will, or I guess it was last night, right after the close when the announcement was made. So all these headlines right at the perfect timing, of course, right? 7 a.m., 4:15, right as the market cashes close, right? So anyway, the consolidation, the location of price action is bearish in my view. If we were to start taking out these lows in here, we know that we do have downside references under 580.75 Friday's low into 574.25, and then this gap level down below is my next area of interest. 566.85 to 565.90 is the major spot. And once again, think about your expected move for the week. Options market certainly pricing in that you could get there no problem, and it wouldn't really bat an eye at being over its skis in terms of volatility or risk that it's assigned as of Friday's close. With that, let's take a look at let's just acknowledge the bull side reversal case, right? If there was going to be a screaming up day, like something that looked like this, really, really up there, and then we pulled back on Friday, and we really were holding in firmly over the prior range here, could we start to think of this as lows, lower lows, higher lows for inverted head and shoulders? It's possible. I would keep an open mind to it, but I would really want to see more of the supporting evidence start shifting, which, as I know I've pointed to the sectors, this is just a part of it. But as we've made note, supporting evidence is really not aligned with an overly bullish or risk-on environment here. That's the daily. Let's drop it on down to the hourly. You could see, again, if you had stronger sellers in here, you'd think left head, right? In here, wouldn't you put the pressure on and try to get at least back up to the neckline, over that into the 20? Didn't really happen today. I will give the buyers some credit in the sense that, yeah, gap fill reversal did keep prices over the Tuesday high, and the after hours were slightly lower here by about $1. So where does that put us? Just roughly 86.79s, right around in here towards the lows of today's session. So, you could still argue for inverted head and shoulders like this. Now your neckline's a little bit more of a quasi, trend line, if you will. Even if that breaks, right? Once again, am I sitting here calling for a massive reversal? This is the start of it all. It could be the start of it all in hindsight, but for now, the base case for me is any rallies into this area. I'm looking more so for rejections underneath 595, and then continuation back down into the equal lows there at 580.75, continuation beyond that for the lower low, and continuation of the trend as we've described on the S&P, right? Once you set a lower high, you're really looking for the equal low, and then at the equal low, looking for the lower low to continue the trend. Once again, if there's going to be this, I'll change my tone as evidence starts to turn with it. But for now, I would think lower odds, not really the base case. If I have to eat my words, then so be it. Like, I don't want to fight against an uptrending market any more than I have to be. You guys know we're the permable of YouTubes over here. So, sure, flip us back into an uptrend. I've got no problem with that. But from my viewpoint here, the supporting evidence has not turned. Let's jump into the intraday anchored VWAPs. You can see we're right at the cusp of losing the Friday anchored VWAP via the overnight pressure to the downside. So any open underneath 586.75, I mean, I don't want to say kiss it goodbye as in like it's the end of the world, but you just don't have any support from your anchored VWAPs here. If you do start to recover over 595, once again, that is a clearance of this Thursday gap down anchored VWAP, so we'll give a little bit of credit on that one. Once again, to keep it simple, this is the major zone. If you're here, great, maybe we change our tone a little bit. I'd be more open-minded to look above and fail, something doing this, lower high. Right? If we do something that looks like this, awesome, equal lows, follow through to the downside. Let's see if we can continue the trend, making a new lower low. Let's break out the Fibonacci's one time on the Nasdaq side from here to here. You can see we've got our 61.8 spot on at 595, perfect confluence with the daily 200 SMA as well. That's the green moving average for anybody who has not picked up on that yet. And then from here to here, low up to this most recent high. Not really getting great confluence out of the 38.2 or the 61.8. Of course, the more time we spend in the midpoint there, no man's land as we call it, just the less confident we are in the market. And I would say that really over the last two trading sessions, very, very low confidence tape, right? The market just went absolutely nowhere. No firm buyers to step up, no firm sellers to step up. Same thing there on the Tuesday session, right? Each session has gone gap fill reversal, and stayed elevated. So I think the market's kind of in a limbo mode, waiting for the next thing to happen. And ultimately, as we're waiting and going sideways, we're not waiting in bullish territory. We're waiting in bearish territory, sort of, seemingly waiting for the next shoe to drop on the bear side. Is like, there's only so many ways to say the same thing, right? So there it is. That's your downside on the NASDAQ. Let's go on over to the NASDAQ internals and see what we've got here. Once again, Monday is all about the disjoint from Friday's close. The disjoint is what makes this seem so severe. I don't think we did anything so impressive on Monday where I'd say, oh my God, it's like through the roof. No, I'd give more credit to today's session, making a move here on the AD line up in trend higher zone. Give a little bit of credit to the buyers on that. Overall, though, you could see here out of the cumulative build on the tick, really not doing anything substantial as it relates to intraday pressure. This is much more indecisive action, and once again, location, generally speaking, is slightly more bearish. Let's take a look at the NASDAQ side of the market profile and see what we can glean from the profile. Any shift in value, I would say the same thing as the ES. Value on Friday. Here's Monday. You would think, like, if this thing was over the moon, you should have clean value, like big separation to the upside. I mean, like maybe a small amount of separation there. How many points, just to be accurate, right? Let's just call that 350 up to about 375. A 25-point move in the upward direction of value, a shift. It's not really that bullish. If we had 125 points, then maybe. But for now, really lackluster build as it relates to volume and value. You could see here and here, mostly sideways more so than anything. It's not really convicted in the upward direction. Sure, you've got a little bit of this action happening here. Wasn't quite a clean J-period single print on the Friday session for the NQ. Nonetheless, still respecting structure there off of that mechanical set and L and M periods as the low of Tuesday's session. So we'll give it a little bit of credit on that. But for now, base case stands as is. Let's jump back on over here to the platform, take a look at the small caps and see what we got going on from this perspective. Give a little reset. There we go. So on smalls, I got to be a little bit more open-minded. And I think on small caps, right, the logic behind this is you never took out the 200 SMA, right? Small caps actually perfectly bounced off the 200. They were in a slightly stronger trend behind it anyways. This, I would argue, is certainly neutral since the start of the year, but this was much stronger than what we had seen over in the S&P 500. So you're coming with a firmer footing on the higher time frames. Nonetheless, 200 SMA is held. You're over this neckline. Technically speaking, if you want to get crazy here, I mean, the Nasdaq has already found, sorry, not the Nasdaq, the small caps, the Russell 2000 has already found a slightly higher high. I mean, that's pretty compelling. What do we know about small caps as well? They're more so a gauge of breadth, you could say. I mean, it's 2,000 stocks, small caps, of course, but it's 2,000 versus the S&P 500, the Nasdaq 100. So breadth might be subtly improving here. I've got evidence that says on the contrary, but nonetheless, for small caps, not really the worst look in the world. If you wanted to start considering this a quasi-inverted head and shoulders, you're over the neckline. You broke above, you stayed above. You're rejecting the 20 still, so we've got to be a little bit more open-minded to a look above and fail, in my view. If you get back into this range, that would be kind of nasty, down into the right shoulder again. But for now, at face value, lower wick, gap fill reversal over the Tuesday high, stronger day on Tuesday than the broad market S&P Nasdaq. Once again, a little bit of credit deserved here on small caps, trying to stay over 251. So in the effort of trying to keep it simple, 251 is a major arbiter of price, as is this level here, the right shoulder at 245.50. If we could stay above 251, great. Maybe there's some follow through here into the follow through day satisfied count, which is at 255.60 on the top side. And if we do go look above and fail, which I'm got to be honest, I'm a little bit more partial to that, I would be thinking about the right shoulder coming into view as a target, 245.50, as we've said, a few times now so far. Let's go on down to the hourly chart. You could see how the market struggled up against the 20. We did set sort of an intraday lower high as well as an intraday higher low. So you're in range compression in the very short term. If we did have stronger sellers, I would tend to think that the second hourly bar of the day would find acceptance underneath 251, right? You rally into the not 200, but the 20. You reject, and you're here. You're under 251. If you're a stronger seller, this is the outcome that you want to see, not a close back above that level. So once again, have to give a little bit of credit over here in the small caps. I truly hope, by evidence of this analysis here, we just take the chart at face value. I don't want to have to be any more bearish than I have to be in the S&P, the Nasdaq, or the small caps. And as you can see here, this just isn't as bad as the other charts. Objectively, it's not, right? Are we out of the woods? No, I don't think so, but, it's certainly a step in the right direction, right? What I would love to see, if you're trying to be constructive on smalls, you probably want to see a rally here, very reasonable spot for a pullback to develop again. And then if you could set a daily higher low here over the neckline more meaningfully, yeah, that starts a change in trend, absolutely holding over the daily 200 SMA. So that's really the next watch if you're a bull here on smalls. Let's go down to the hourly chart again and hit it with the intraday anchored view apps just to be congruent in the entirety of the analysis. Notice how we're over the entire stack. Very, very different look than what we just had in the Nasdaq and the S&P 500. So the longer we could stay above, the better outcomes there are for movement in the upward direction to sustain. If we come in here with the same Fibonacci's, remember, we pulled from this prior high, last week's high, to the low of the move, you can see it for yourself, we're over the 100% retracement. There's not much Fibonacci analysis to actually do as it relates to that move. If we come from Friday's low up to today's high, notice that we're still over the not the 68.1, but rather the 38.2. Any consolidation, if we do just grind around in here, it might not be the end of the world, right? I would prefer, of course, that we stay over 251 flat, but Fibonacci analysis sort of says, you could kind of hold the stack of anchored view apps in here and still be all right for an hourly higher low, lows, and higher lows. So that's that on small caps. Let's jump on into the Russell side of the market internals, see what we got going on from this perspective. Much weaker volume inflows today. It's kind of ironic considering that the chart looks stronger. AD line, not as strong. Cumulative builds, definitely a little bit better in terms of their validity in the upward direction there towards 1,000. Substantial here on Russell is going to be a 2,000 print. We haven't really seen that in some time, but also on the downdraft, to give credit where credit is due, that was only negative 1K, right? It's not like you went out to a negative 2K on that Friday session from last week. So small caps kind of liking what they're seeing here as of right now, hoping that the MFEU scale continues to move in the right direction for interest rates, right? Really, what oil has done is put a shock to interest rates and put a pressure on the Fed that boxes them in, right? The dual mandate is really at odds with allowing them to do anything. They can't cut because they'll spur inflation. They can't hike because they'll kill growth, and the labor market is just getting pummeled, right? So small caps are starting to say, okay, maybe the oil shock can start to calm down a little bit, and then rates will ease, and the Fed will continue on their trajectory to ease rates. That's basically what small caps are starting to price in as of right now. And once again, I'm kind of at odds with that thesis. I don't think it's how should I say it? I'm not overly convinced that that's the outcome. If it is, then fantastic. We won't fight it. But for now, let's just stay objective with the charts. You can clearly see value is where? Elevated on today's session. One of these things is not like the other, and the market profile certainly supports that for the Russell. Let's get back on over to the platform here, and let's finish up the look through our sectors, or let's start the look through our sectors, really. We've got who's leading, who's losing, and where's the weight. Energy leads the pack, of course, with what's going on with crude up 4.63% on the week. Then we have materials, lightest weight sector there is. Semiconductors, as mentioned in the intro, really impressed with some of the action in the semiconductor components. We'll get into that. That's going to be really almost all of the trade ideas are related in a way to semiconductors, electronics, equipment there for data center, right? XLY also not having a terrible week there, up 0.87%, not over the 1% threshold, but not bad. Bottom of the barrel is software, just getting absolutely wrecked on that Tuesday session. Monday actually had a nice breakout, especially Palantir. Anyways, moving along, real estate towards the bottom end of the barrel, as well as communications and financials. Still a thorn in the side of the market. Financials look really, really ugly. Let's jump into the structural chart. So overall, what does risk posture stay? Not really a risk on market, right? It's kind of split, if you will. There's a split with semiconductors looking good, tech and financials not really looking so great. Let's jump on in here. Energy, I think the chart speaks for itself. Crude obviously speaks for itself. And as long as we remain elevated here, it's going to be an inflationary pressure for the market. While we're on it, let's just look at crude now. Let's not belabor the point. Let's bring this down to the hourly chart. This, of course, is the Monday morning announcement, right? And generally why there's a Fibonacci on here, if the market's a believer that there are going to be negotiations and conversations about things getting better, you want to see prices remain almost down towards the extreme price of that announcement, right? What would be the worst thing for crude in terms of a positive development here as it relates to the MFEU scale would be a move all the way back up here to 98.75. If price in crude comes back above that level, then the market's completely discounting everything that was said on Monday morning. No deal. We're not interested in that. The war rages on, and this thing gets dragged out, and oil prices remain structurally higher for a longer period of time, obviously as a major impact to inflation. So 98.75, that is the number to beat. As long as we're below that, the market believes to some degree that a deal could shape up. The best place for crude to be would be down here. Now, where is it currently in the after hours? Kind of right in the middle. Right, 50% retracement here. The market's still sort of teeter-tottering, just like we talked about the fib from on the market internals when I was talking about the ES, right? Right in the middle. The market's like, maybe there's something to it. Maybe there's not. Maybe it's not as good as we think. It's not as durable. It's not going to be as long-lasting. That's kind of what the market's suggesting as of right now as it relates to crude. You could go over here to BZ, which of course is the Brent, and you can see the same exact thing where we're closer to about, I'd say in the lower third still, but if we just break out the fib from the top down to the bottom, it's right there at the lower third. Right? Ideally, this would continue to be here and take out 98.35. That would be a big step in the right direction to reduce the pressure on global oil prices, right? So that is what we've got there. Let's continue along into XLB for materials. It's one of the lightest weight sectors in the market. It is the lightest weight sector, actually. So the fact that this is rallying in here, you might be like, oh yeah, look at that. That's awesome. It pulls no weight for the S&P 500. So yeah, I mean, it's technically reclaiming this level. In a picture-perfect world, sellers would have just stepped up for a lower high there. But there's still room for a lower high. They're not daily 20. You could just have look above and fail there. And it's the lightest weight sector, so it's not really doing anything to make me overly enthusiastic about longs. If we look at SMH, this is where I've got to give some credit, right? Everybody's looking at this through the lens of head and shoulders. And honestly, rightfully so. It's definitely there. There's absolutely a lower high. The moving averages are pinching and starting to reorient in a more bearish direction. I would just remind us of this situation. We've been talking about this in the group for a while, right? This head and shoulders is a prime example of when everybody can see how obvious the setup is, maybe it doesn't actually play out, right? Now, I think that the conditions of the market here were dramatically different, obviously, than what we're dealing with over here. Notice that entire formation, the 20 and the 50, didn't even come close to crossing, never mind even sloping in the downward direction. So, let's not compare apples to oranges. I think this is totally a different situation, but what would be the classic quote-unquote pain trade here for semiconductors? Everybody thinks it's lower, and then it does this into the high. Everybody gets re-jazzed up about the long side. This turns into a weekly double top, and now you test this after you sucked everybody right back in one more time. right? It doesn't have to happen that way. I hate to sort of be like a conspiracy theorist and the market's out to get you. Oh my God, it's the boogeyman. It's not what I'm, trying to get at, but semiconductor components, as we'll see, the three trade ideas, all semiconductors, right? Those charts look pretty decent for upside, mainly in manufacturing equipment. So that's semis. Let's go on over to XLY. And if you don't lose semis, let's just go back. If SMH does not take this neckline at some point and do this, then you might not actually have the massive, 15% correction, or I think it was 12% correction we were talking about, into about 615 SPY that gives you the monthly high or low thesis. You need to lose semiconductors if this is going to continue to be painful in the market. Let's jump on over to the XLY and see what's going on here. It looks bearish. This just looks like a lower high to me underneath prior lows, rejecting for a lower high, easily could continue in the downward direction underneath today's low tomorrow. Plenty of room to still sustain a lower high, even if it tags the 20. Let's jump on over to XLU. As a defensive sector, you'd be like, okay, this is maybe going to hover out near these highs. Obviously, it hasn't. That was Friday's bar. We talked about that on Saturday. Plenty of room for a lower high sub 46. No change here. It does not look bullish to me. If we look at industrials, another one that just doesn't really look bullish to me. This is more like a topping formation, head and shoulders, still respecting the neckline there, 20 pinching through the 50. It's not really a great look. You technically have an overshoot here to a lower low. There's plenty of room for a lower high. I'm not convinced that you have a turnaround story here. If you look at IGV, I've got to say I'm a little impressed with the selling action on IGV. This was a really nice taper in volume as we were getting this, potentially as a flag over this key inflection point alongside a 20 SMA cradle, completely thrown out the window on the Tuesday session. So sellers, I gotta hand it to you. I'm pretty impressed with the breakdown here in IGV. Certainly some headlines on Tuesday morning that related to Apollo being only willing to pay out 45% of their private credit loan, or depositors could only sort of take back 45% of their loan, if you will, or investment, however you want to phrase it. That possibly put the pressure on IGV, right? Pair it with what happened in Palantir. Circle, of course, got absolutely wrecked by the Clarity Act. So, all these things really point to a deteriorating chart on IGV from what was looking kind of constructive here over the 20 to very quickly unwinding, a little less interested in IGV now. And this technically does just look like a weekly lower high. Let's go on over to real estate. Interest rates putting the pressure on over here. It's a lightweight sector, but do think of it from a wealth effect perspective. If people start believing that their homes are going to start being worthless, right? Not literally worthless, but the value of their home is going to be, dialed back a little bit, even though, literally not everybody's out there getting a HELOC to go, fund their next purchase or whatever. It's just going to, they pull back on the wallet a little bit, right? That's the nature of the wealth effect. Oh my God, the house isn't worth what we thought it was. Let's save a little bit more money, right? That's the situation that we're dealing with as and if real estate prices start to come in more aggressively. Let's go on. And so what does that mean? Less spending, less earnings, right? For companies. There you go. Let's go on over to communications. Looks weak. I mean, there's nothing to really say about this other than a break of the 200, continuing to accept underneath. You were hanging on for dear life into the Monday session, but just completely falling apart on the Tuesday and then on today's Wednesday session, confirming that via the lower high in the upper wick. Let's jump on over to the XLF, also looking horrible, rejecting the daily 20 SMA. Nothing really constructive to say about this. In a downtrend, sustaining the downtrend, still rejecting this. Plenty of, even if you pop the 20, look above and fail, I think could easily produce just a lower high underneath these prior equal lows from over here. No change to this. Maybe earnings season is the next big catalyst, which is going to start mid-April for the big banks. Maybe that's enough to pull it out, but just right now, really, really tough look. XLK, another tough look here, rejecting the 200. Remember that as of late last week, really Thursday, we were closing back above, just finally breaking below on Friday. We didn't really make big new lower lows, but what we do start to see here is just the sustained lower high pressure. So anybody who's long from this congestion is starting to think, ooh, not working, getting a little bit more red. Where do those people throw in the towel? I mean, I would have to imagine there's a stop run underneath this 134.30s, which just continues to put the pressure on. I will say, a little bit resilient here, considering what happened in Microsoft today, but nonetheless, XLK trying to hang in there, primarily being impacted by NVIDIA. Let's jump on over to the MAG7 ETF. This just looks horrible, right? Still rejecting underneath the overhead supply here. Tough to get jazzed up on this one until we start to take this out and set higher lows above 60.10. So not really bearish. Absolutely bearish. Not really bullish at all. Look at the 2200 cross. You're about to get, the also famous or infamous, I should say, death cross as they call it, with the 50 down through the 200. We'll see. XLP, nothing really to write home about on this chart. Even if you bounce from here, lower highs abound. Even if you bounce from here, lower highs abound. Let's jump on over to healthcare. Healthcare, one of the defensive sectors, no hiding over here in this. It's not like we're getting a rotation. We talked quite a bit about this on the Saturday update video. You're not seeing a sector rotation. You're not seeing the defensives get a bid. Yeah, you're up for a couple of days, but it's not like this is an up trend. There we go. This was where your rotation was taking place from October to maybe in here, January-ish, if you will. This is the rotation that kept the S&P 500 going sideways. Now there's no hiding, right? That is the bottom line as it relates to sectors. Let's jump on into the ratio charts and see what we got going on from this perspective. If you're not familiar with ratios, check out the video tutorial in the top right-hand corner. It's pretty cool stuff. XLK, a little bit like neutral there still. I've continued to give that one some credit on the ratio chart. This still looks horrible. This is deteriorating. This doesn't look good. This says defensive. This says defensive. So there's zero risk appetite here as it relates to the actual sector posture. If we jump into the ASET, what do we have? 1, 2, neutral, 3, 4, 5 out of 6 bearish. Maybe a neutral here, noting that ever so slightly making it a slightly higher high. That's semiconductors versus healthcare. And if anything, that just reinforces once again, if we end up coming out of this, semiconductors may once again be the leading group. It might not be NVIDIA. It might not be, well, AMD actually looks really good right now up at the top end testing its earnings gap. But it might not be, it might not be NVIDIA. It might not be, why? It's right here on Broadcom. My goodness. Might not be a Broadcom. Super micro, just forget about that with the big gap down. It might not be an A-Lab. It might not be a CRDO. But it could start to be some of the newer players in the space, ones that are just announcing big things like ARM, for example. And we've got some others. ARM is not included in the 3 ideas. Anyways, reinforcing data point for semiconductors. Let's jump on over into the B set. You can see that the gold ratio has made some stable improvement here, but once again, we know that's because of interest rates and how crude is impacting that. It's not technically a more risk-on signal to see SPY outperforming gold here. It's more of the inverse, where interest rates are you need to know the context behind why this is actually moving in the upward direction, right? It's not just face value there. Bitcoin's still acting well with potential higher lows here. Got to give that some credit as being a risk-on sign. I don't think we're out of the woods, but some credit. Then you can see here on the TLT, still making lower high ratios there. This is not good for risk appetite. As it relates to credit spreads, jumping on over, let's go dollar and interest rates first. Sorry, we'll go here and then we'll bump over. Dollar staying elevated, rates starting to come down a little bit. The running joke is just that whenever rates start to reach about 4.5% on the 10-year, somebody in the administration says something and tries to put the pressure on in the downward direction. So, you could believe that or not, but look at what happened all through the tariff debacle, 4.5%. It seemed like every time we inched over 4.5%, some announcement, some deal was being made, some this, some that. Rates came down a little bit. Oh, put the pressure on. Oh, come down, right? So we'll see. We didn't quite make it to 4.5, but you get the idea. The administration, the headlines are everywhere that the debt burden has been the highest that it's been in all year, right? So people are paying attention to rates. Scott Bessent didn't fall off the turnip truck yesterday as literally a hedge fund manager. The guy knows kind of the inner workings of how the bond market works. So we'll let that be. Let's continue along and see what else is going on here with the inverted ZT, which is the Fed watch, basically telling us that don't expect any rate cuts anytime soon. And if you've been tuning into the pre-market preps, or even if you just watched on Saturday, there's been no change. Pause all the way out to the end of 2027. That's right, you heard me, 2027, not 2026. No cuts for you, market. You're seeing 70.6% odds of a pause. Now, do we really believe these odds are going to be cemented here forever, for all of eternity, and this is what it's going to be? Developments will change these odds dramatically as bond markets reprice things. But for now, the idea is the market's pretty timid about the future prospect of rate cuts, right? So you could play contrarian here, actually. And if you've made it to this point in the video, please, just take this to heart. The market has priced in kind of what I've suggested so far, which is that things don't look great. The conditions under the hood are not awesome. Inflation is sort of uncertain at this point. The labor market's in a tough spot. What the market's not pricing in is that things do get better. They get better much more rapidly. This curve starts to look something like this, right? And that, of course, would be upward pressure in the market. So, don't get me twisted. I know, I know that the contrarian play here would be the unpriced situation, and the market would respond in kind in the upward direction. If we see that starting to take shape, then we should quickly get in line and not hold on to our current bias of being overly bearish, right? So for what that's worth, there's an acknowledgement. Let's jump on into the economic calendar here. PMIs actually came in pretty good, over 50. That's expansionary there. So growth, not terrible as an outlook there. We'll see what happens with jobless claims. It looks like President Trump is scheduled to speak in about 20 minutes. So I should wrap this up so we could go, watch at the edge of our chair and watch the ES futures tick minute by minute as every word is said. Anyways, jobless claims tomorrow morning. That's the big tell as it relates to the labor market. A lot of FOMC speakers here into the after hours on Thursday, and then revisions to consumer sentiment. Not really concerned about that on Friday. Just keep in mind that next week should be the full Monty labor report, right? There you go. There's your JOLTS, there's your ADP non-farm, and then on Friday is the full labor report, all right? So that is next week. That's coming down the pipeline, and this stuff will be a big deal considering the Fed is caught between a rock and a hard place. As we look at the earnings calendar, Ondas, before the open today, the chart really didn't do anything all that compelling. Pony AI I have not looked at yet, and rightfully so because that's Thursday before the open tomorrow. Karaman after hours I also haven't looked at, but that is an interesting one that we should go look at right about now because nothing else really grabs my attention on the earnings calendar. Maybe Carnival and maybe the metals company. This is rare earths, and this, of course, is super sensitive to oil prices right now with, of course, just their operations. Let's go back on over here. Let's quickly take a look. We'll divert to KRMN. KRMN here, right? This was Wednesday after hours. Yeah, Wednesday after the close. What are we doing on earnings? We're unchanged, maybe slightly higher. So not quite a good enough move to break up and through this today. We'll see if it can hold on to the moving averages cradle and make an attempt, quasi cup with handle. Here, it's more like on the higher time frame. Is this just a weekly higher low? And can we continue here without too much pressure for a lower high? I think it's still in the right space. We'll see where we go from there. Anyways, that's KRMN. Let's keep going through the supporting evidence. Let's finish this thing up on a strong note. Let's jump on into our credit spreads and bonds. Here we go. Bonds are saying, maybe inflation kind of cools a little bit. I shouldn't say cools even, but the trajectory has slowed down, if you will. This is a rapid ascent here. Remember, these things, like this, that's a very rapid move. For this particular ratio, it's sort of slowing down where it needs to slow down to keep a lid on inflation expectations. We'll see what happens on Friday with the revisions from consumer sentiment and inflation expectations, University of Michigan. And then this up here is just telling us that the labor market, right, has problems. We know that. That's nothing special there. Let's jump into credit spreads. Continue to widen on the bottom side here, or at least trend in the upward direction. This is bad for forward returns in the S&P 500. This is a risk off sign, basically. Let's say off because O could also be on. Risk off. I'll give a little bit of credit to this one, but the short end, SHYHYG, is more of the one that you need to pay attention to. Let's jump from here over into our junk bonds in isolation. Are they showing us any sort of divergence? Survey says not really. Maybe a subtle higher high. Like if you do that, it's pretty obvious lower high in the SPX. If you do this, it's kind of an equal-ish high. Maybe nothing to really write home about, in my opinion, on the HYG as it relates to divergence. Let's jump on into the total breadth. This is what I was saying earlier with the small caps. Not really, small caps look fine, but for overall breadth, you're still under the 50% mark here, certainly under the 50% mark here, and you did not get into oversold territory at 10% on the 50 SMA components. If I just drag this down without breaking Thinkorswim, let's see if it'll cooperate. It did. Would you look at that? But will we have to auto zoom that? We will. There we are. New highs versus lows is still negative. That's not really what you want to see. If this is truly going to be a breadth return and oh my God, everything's great, you want to see a breadth thrust, right? You're going to start hearing people talk about the ZBT, the Zweig slow down. The Zieg breadth thrust, right? So we'll see if those criteria are met eventually, but for now, this is still bearish. As we jump this up here to the RSP, let's just go full screen and we'll cycle through the rest. RSP, you still have this similar look, but not much different from that of the weighted. Still a lower high there. And then if you look at the QQQE, you see the same thing, still just stacking lower highs as we move in the downward direction, and most notably, this did go out to a more substantial lower low. So breadth, not really a believer, even with what the RTY and the Russell is telling us. Let's jump from there over to our volatility complex. You can see the VIX remains elevated, even with the peace talks and the negotiation tactics and this and that. VIX went right to 2050 and then bounced right off of it and remains elevated. I don't know about you, but that's a pretty low confidence move as it relates to being a believer in the future here of the negotiations. If you look at the VVIX, still near the 120 handle, that's not really a great look, and we did ultimately correct our vol futures curve here, still in a decent backwardation of about 60 cents, which is enough to keep money managers on the sidelines, not allocating new capital yet. If you take a look at the 9 versus the 30, starting to poke back up into a contango, but nothing that I would be overly confident in. This is the holy grail up top. This is a secondary. If you look at the one-day VIX, still elevated here over 1275, just telling us that the conditions overall have not materially improved. Right? If they were, then you'd see this back above zero, as we just talked about in VIX literally itself. You would see this back underneath 2050, right? You're just not getting any of those ingredients to really suggest that we have a full-blown risk-on environment. Let's jump on into the core list of companies. Let's get the job done. We'll send you on your way with 3 trade ideas. We'll also look at some leaders in between the trade ideas and the core list, all right? So we'll talk leaders in just a second. Lower high, happening here on NVIDIA. Great rejection of the 20 SMA. Nice little gap fill reversal off of that level. There's a very tiny little gap in there around 180.30. It's a little too early to that trade today, but nonetheless, nice inverted hammer, daily lower high. Underneath its low, I would expect continued breakdown towards this area here. It might even be best to see this open like this and then get that on Friday underneath the 2 equal lows, 174.25. If I just drop down here, you could see, once again, in the after hours, kind of just, right in here, basically. This would not be the idea I want. I would want this, and then this is the idea. Short right here as we're taking out the 2-day low through the thin structure into the 171. That would be NVIDIA. If it is going to be strong, I would kind of let it be in here. I think there are far superior long setups in the semiconductors, which we'll get into. If we look at Apple, another rejection off of the tired old neckline from the inverted head and shoulders. So you're still in right shoulder territory. I'd still keep an open mind to this. One thing that is going to start changing is that the 20 SMA is barreling down on price. So instead of having a larger range to trade for, it's just going to get smaller as we go day by day. The next thing that would be ideal is that the 20 just continues to go like this and like this. Then the next thing you know, this entire Brigade bolt is reclaiming the 20. So 254.65 is still the number to beat on Apple. As long as you're over the 200, wouldn't be overly bearish. This one here has really failed to follow through underneath that low. Let's jump on into Microsoft. This one has not hesitated at all to follow through underneath the lows. As you can see here, continuing to slide underneath this area, no longer really offering even the potential for a double bottom. Really weak stuff out of Microsoft. Possible contagion with the OpenAI situation, is that maybe it? I think so. Something's got to be going on here in Microsoft behind the scenes. I would not be surprised if we start seeing some headlines about things going awry, maybe some large shareholders, employees of the company selling shares in a big way. I mean, this is just not, after the earnings gap down, if everything was going to be fine in software, IGV, why is Microsoft leading it to a new low? Right, so there's something wrong going on here in my belief. It's just not following along with any of the other components of the market. It's been one of the heaviest stocks out there, so just possibly looking for some follow through. Any lower highs on counter trend rallies off of 382.25 really fit the bill, and I would look for shorts up against that area on counter trend strength. Wait for it to come into that level, reject, equal low target. Right, the time where I would change my tone is if it reclaims that area here and then starts to retake the daily 20. Right, you had this nice curling action there. Maybe going for inverted head and shoulders, completely fell apart with lower high underneath the overhead supply. So hard to be really convicted or convinced, you could use the other word, on Microsoft here. Let's go on over to Amazon. Amazon, if this would zoom. There we go. Amazon, I really don't like this chart, if I'm being honest. Let's fold up that volume a little bit. You've got this trend line in here. Maybe that breaks and there's a long setup into the 50. That's a possibility. It had some strength today, semi-gap close, holding above. Not in love with it. I would watch 212.50. If we can step above that for Brigade Bolt here, again, I think you're just targeting these highs on the 50 will be kind of in there to meet you towards the end of the week, right? Could you say inverted head and shoulders? Sure, but you could also at the same time just keep stepping down your lower highs. And if you're here, I'm just not interested. So 212.50 is the number to beat. Let's jump on over to the Googler. Big break. Let's go to the daily chart. Big old break of the daily neckline from the head and shoulders, left head, right shoulder. This is one of the only Mag 7 names that has not had a substantial fall from grace. Let's see if that does that into the end of the week. Under 296, the door is open into 276.25 from this range back over here on a failure below 290.25. That's mostly today's low. If we zoom into today's low, look at this as just a bear flag consolidation, and then the gatekeepers open it up under 290.25 as we've mentioned. So pretty straightforward setup. I believe this is a decent short, it looks like in my view, with tons of overhead supply in the beginning stages of a breakdown. You've already got the moving averages oriented properly here. Now it's just a matter of, do we get the range rotation, and ultimately does the 200 start to play catch-up support when and if we get there. So those are the next steps there. Would I change my mind over 296? I'd be back to neutral, but I don't think I'd be, jumping for joy on the long side. Let's go on over to Broadcom. Broadcom just, really ugly here inside this balance range, so I'm not really convinced of anything in this range. This is like noise to me. I would start looking for clarity here over 3650, or I would start looking for clarity here underneath 309, because semiconductors seem to be an okay sector right now. It's hard to want to get overly bearish if the entire group is acting well, but the chart just doesn't look good, right? You've got highs, equal highs, lower highs in here. You're underneath the moving average cradle, so pressuring prices lower. You could look for the 309. I wouldn't fight that, but I'd want to see definitely some SMH weakness if that's the case. Let's jump on over to the metaverse. This still just looks like a bear flag down here. Honestly, I would have liked to see a stronger counter trend out of this to close the gap above 614.50, some kind of lower high there, and then a rotation into the lows. Still interested in that for a daily lower high. As we look to a trend line, very possible that this could also get this unfolded underneath, 590.25 into about 583. That would be possible for some downside. So watching out for it. Not my favorite. I'd prefer that there's a counter trend lower high to short rather than trying to short continuation, but Meta has really been weak. Breaking down from this, I wouldn't say similarly to Microsoft. I think Microsoft's weaker, especially looking left on this Meta, but you get the idea. Relative to this range, not really a good look. Let's take a peek at Tesla. Tesla has a great lower high right at the 200 and the 20 SMAs. Another one just a little bit too early to the setup, and unfortunately, it just ran away without me there. So a little frustrated with Tesla and NVIDIA today, but nonetheless, charts are acting and doing what they should be doing. That is on me, not on the chart. So for now, looking for this to continue lower up against this. Breaks of today's low should follow through into the equal low after setting a daily lower high. The trend is down. Certainly don't want to revenge trade this, but doesn't really look great on the long side, right? I would think that this idea here puts the pressure onto this, and really, I don't know that I would be short into the shoulders of the, inverted head and shoulders here. I wouldn't be short through this. I would really wait for that. That's going to be underneath 377.25 into the head of the pattern as you lose the right shoulder, right? So interested in that after gap fill reversal. Let's jump back over here to the dailies. Let's take a look at JP Morgan. A little bit of strength over here, which is odd because financials didn't really perform well, so it makes me want to immediately look over to like a MasterCard. Not bad. What about a Visa? And then what about a BRK/B? There it is. There's the heavyweight hitter moving on in the downward direction. So overall, nothing that's overly compelling on JP Morgan, but I will give it some credit over 292.50. Not the strongest looking daily bar, but I certainly would tend to think that you could easily get back to here and the pressure's right back on. Once again, earnings might reshape the landscape of financials, but for now, it's not really a compelling story. Let's go on over to Palantir and see what's going on over here. We have ourselves a 200 SMA rejection back inside of this balance range. I don't love that. At least from the long perspective, that is. I don't want to get involved in here. I would prefer that if Palantir is going to be a long, you set this up, and then some sort of a reclaim of the 200, right? So higher low action in here, and then a Brigade bolt over the top. Or if you get something that looks like this, maybe we're back on for a pullback long off of 145, the prior left side peak from here. So those are the two situations I would watch for on Palantir. Certainly looks a little bit cup and handle-esque. Something over this area, certainly worth interest. It has been acting somewhat well in this area, certainly not on Tuesday, but more broadly speaking, it has not been moving lower with the market, right? You sort of marked your low here on earnings. Now you've moved north a little bit. Let's jump on over to AMD, one of the semiconductors that looks absolutely stellar. Big gap and go today. Like the low of the bar is the opening print, basically. Reclaim the 50 SMA right into these equal highs. In my view, you're either looking for consolidation and some sort of continuation, or if this closes the gap fill reversal could be a long opportunity there, trying to get involved. This has held daily 200 quite well. Semiconductors as a group seem to be acting well. Would I short this? Wouldn't be my favorite. If you were going to try to do it, I'd look for the double gap close, which exists from back over here. So double gap close and then failure back underneath this 218.85 maybe, but not really a top priority in my view. It's more so look for either the pullback to get here and long that higher low, or look for the consolidation and eventually the break that maybe sends it into the earnings gap more meaningfully. Let's go on over to Robinhood, and then we'll take a look through some leaders, and then we'll get into our 3 additional ideas. Robinhood, I could see the inverted hammer. It definitely looks ugly, don't get me wrong. But I don't really see it as being a top priority to short into this weekly level. I've been saying this for the last, I feel like 2-3 weeks. I'm going to say the same thing. Not a priority to be short into this area, especially with Bitcoin bullish divergence, doesn't really make sense to me that you try to force Robinhood short into these equal lows. Just not really something I'm all that interested in. If it is going to perk up, I would love it in here and something that starts looking like that to build out a base. So maybe it just needs to build out more of the right side. Right side of the base gets built, and then we start to move from there. It's a possibility, TBD on Robinhood. Let's get into a couple of leaders just to take a tour through the market a little bit. SanDisk acted incredibly well on the gap down this morning, respecting the daily 200 SMA. If you look at MU, not quite as good, but it did print a hammer in here. I'd be more apt to look at a SanDisk, for example. WDC for the memory theme also looks really good. If I take a look at WDC, check that out. Hammer off the 20. And possibility to go back up into those equal highs. And then, of course, let's not forget about the long-lost brother, STX. STX looks more like a WDC here, cradling the moving averages, or I should say the moving averages are cradling price, and you sort of have this potential back into the highs. Could this be a high flag on a weekly? Maybe. This was a nasty, nasty shakeout if so, but it doesn't look terrible. So we'll leave it off at that for memory. Let's go on over to the optics. These things continue to look great, just kind of an inside resting bar-ish on light today. If we look at a CIEN, out to a new record high, continuing in the upward direction. Let's look at a GLW. Not bad, making a move over the prior day's high as the market's kind of just flubbing around. Certainly looks pullback worthy, right? Something that looks like this perhaps on GLW, not unreasonable, but nice break and a 2-day follow through over the low cheat setup there on GLW. And then let's go to an AXTI. Just awesome looking inside bar there. Very hard for me to want to do anything with this stuff, but it just goes to show that there is strength out there in the market. And let's go with AAOI, which they just released a 2x ticker for. I don't know why you need 2x of 9.75% ATR, but anyway, again, following through over this little pivot high doesn't look half bad. If we look at some software stuff, DOCN, which is really more like software infrastructure, gap down, immediately bought back up. Look at the volume on DigitalOcean, right? This is like, that's a pretty big deal. So clearly one of the newest market leaders just ramping in the upward direction, gap up being bought with both hands. That's institutional. That's not just like, you and I playing nice in not DocuSign, but DigitalOcean. We could look at a Fastly, which is the stock that seemingly can't do anything wrong, continuing in the upward direction. We could look at a Dell, which is clearly a new market leader. Look at this thing. You want to look for strength in names like this. VIAV, right? Another new high over here, taking out that left side peak. We could look at a VRT, right? This thing over here is making a new high on a gap up. It doesn't look like a strong close, but it is technically a move in the upward direction, which makes me think Modine. Of course, this also acting well in the cooling space, not half bad. If we look at something like a U, ticker YOU, not ticker symbol U. Inside day today, after a great break on the Monday session, awesome move up and over the left side peak on an increase in volume. Once again, what I'm trying to illustrate is that some of these thematic names are working fine, right? The market looks like absolute trash, but some of these, if you're positioned in the right names, there are some sectors, some themes with leadership, and these are the names that I would think, you should be focused on. Planet Labs, right? Here you go. Earnings gap and go. Does this turn into the next Dell, right? Look at Dell. Earnings, gap and go, and then it's off to the races. Planet Lab. Is this going to be a little consolidation and then off to the races? I'm not going to guarantee that it goes up 1,000,000%, but it doesn't look half bad. You've got a nice trend behind you, and, with the newest sort of rumors speculating about SpaceX valuation for IPO, it sort of seems like it's just a matter of time. RKLB, if I could get the ticker correct. Rocket Lab. Right? This one as well. We actually talked about this in the group right there off of the 65.50 for an undercut and reclaim. Look below and failed. Perfect. Got a nice little move today right into the 50. Ideally, you'd see this out of the little base, moving in the upward direction into 88. ASTS fits the same group, right? You could see the same thing here. This one looks a little bit weaker to me, but Rocket Lab, not bad. PL, and then, of course, Lunar, LUNR. There we go. Also breaking out of this low cheat, having a nice little day today, closing quite well. Let's go from there. We could also look at a Fly. These guys had earnings the other day. Look at the volume starting to come in here. Nice break up and over these pivots. Is this another one of the newer IPOs? I would think that the weekly chart needs some work. You got to build out a little bit more right side of the base here on Fly. We could jump on over to a VG, right? This thing looks, really good. Ideally, you would have been a buyer of the consolidation there. The illustration, right, is that PL could be here on a relative basis, right? Dell did this and moved in the upward direction. So is VG. And then finally, let's go on over to some energy stuff. We've got SEI, which has acted well. Pretty frustrated with this one. Actually was a buyer of this back over here. Stopped out under the 50, and, lo and behold, it is working well now. So still interested in this as a possible idea. Let's go to SEDG, Solar Edge, right? Some of solar's been really spotty if you look at something like an N phase, but look at this curling action, nice strength on Solar Edge. Look at the volume coming in, elevated, right, post earnings. I'm not going to say that these are the easiest things to trade because the market's been very violent and choppy and there's been all sorts of fake outs. But again, illustration is that we are seeing strength in some of these leading names. GEV out to a new high. I mean, just can't complain about that at all. All right, what are these trade ideas? I know we spent a little bit more time than usual on the leaders, but let's just get into the trade ideas. AMAT, Applied Materials. Check that thing out. Inside hammer over the 20 after a nasty overshoot. We know semiconductor equipment and manufacturing is some of the best of the group right now, and you could certainly see inside hammer something like this to the equal high over 377.25, 391 as the target. This is going to be optionable. Some of those other names you can't really, options on DigitalOcean or Fastly. Dell is actually kind of liquid, but some of the others are a little hard. This AMAT definitely doable via options. You could watch over that 377.25, although mind the spread, right? Let's go on over to ANET. ANET, not MET, net, please. There we go. ANET, I thought that this was just worth mentioning because it's getting really tight here in terms of price action. Take a look at that. Of course, Arista making switches and Ethernet switches for data centers. So we'll see if this can get in gear up and over 137.25. This is more like just add it to your watch list and watch to see if the price action can resolve from this tightness. Then lastly, ASML. Excuse me. ASML looks very similar to some others, right? There's your low cheat setup. Do we do something that looks like this? That's it. Like, is this going to be the double bottom reclaim the moving average stack? There's your inside hammer. Can we get the follow through, right? Look at a KLAC. If you look here for a second, same idea in the upward direction, right? So ASML looks pretty awesome there with the inside hammer against the 50 and the 20. And that's going to do it. We covered a lot of ground in today's episode of the Midweek Market Update. If you enjoyed the video or learned anything new, let me know down below in the comments section or by giving the video a simple thumbs up. As always, we'll be live tomorrow morning. We're live every morning at 8 a.m. Eastern time for another episode and installation of the pre-market prep, so I hope to see you there. I'm not sure how we did on timing today, but I think with the leaders section, we probably went over our normal allotment. I think on Saturday, I said, I'm going to try to cut it down a little bit, but hey, it's just, this is the market we're in. So have an awesome afternoon. Have a great rest of the trading week. Keep it green out there. And as always, I will see you in the next one.